Hey everybody, welcome to another episode of Stock Talk. My name is Aman and I am an investment coach and founder of Sage Investors. And as an investment coach, what I do as an investment coach is I help new and experienced investors who want to be financially secure but are feeling confused, they're feeling intimidated, or just generally uninformed about the whole investing world, the whole investing process. I work with people who want to start investing, but they just don't know where to begin, or they've been investing for a long time and just don't feel like they're making progress with their portfolios, with their investments. So what I do as an investment coach is I teach people. I engage with people on how to make better, educated investment decisions so that they can achieve a certain level of financial freedom in their lives and achieve it with a level of confidence. So that's what I do as an investment coach. So this is Stock Talk. This is my own little video / podcast that I do once a week where I talk about various different kind of investing topics, various things, observations that I'm seeing out there in the stock market or with individual stocks and ETFs, and just kind of chiming in with my own take on it, and also sharing with you a little bit of some of my own investment decisions, how I'm using information that I'm seeing out there and observations that I'm seeing out there to make my own investment decisions, with the whole purpose of that you can learn from it and take some of it away and kind of maybe apply it to some of how you make your own investment decisions. So it's a little thing I got going here, and for those of you who just jumped on board with the podcast, welcome. Just get casual, stay around for a while, it's all good. So this is episode 74, and today I want to talk a little bit about FOMO. As I came in here just now, I was just taking a look at what the markets were doing, and it's crazy. The markets have closed, and a whole bunch of companies reporting. Alphabet's reporting record earnings, Amazon, Intel, a lot of the tech companies reporting really crazy earnings, and the market just keeps going up and up and up and up, and we're probably going to see another record high with the NASDAQ. It just crossed the 6,000 mark, and last time we've seen that, it's never been at this level, and last time it's even been close to this level was the .com thing. So markets are doing fine and dandy, thank you very much. So the question I have, especially for the people out there who aren't investing or thinking about investing or have been really shy about investing, is how you feeling right now? What are you feeling? Like, do you feel like, oh my God, I'm seeing all these markets going up and up and up and up. Should I be jumping in? And chances are what you're feeling right now is a little bit of FOMO, fear of missing out, sort of that pressure. And we're in that moment right now where we kind of have really good maximum FOMO going on, where there's just that pressure. You see everything going around. If you see your friends doing well and your colleagues doing well in the markets, making money off stocks, you're going, okay, am I missing the boat? I need to do something. So a lot of times what people do is just jump in, 2 feet in and start buying everything, and it's usually the wrong time to be doing it. So I want to talk a little bit about FOMO and FOMO investing and how we can deal with it and manage with it. It's really, in a way I look at it, it's kind of like the kryptonite of investors. And really where it starts from, where it comes from, why do we get FOMO when we're investing, or how we're very susceptible to it, it comes down to one of the core behaviors we have. And this is one of the things I teach in my everyday investing course, is sort of the behavioral side of investing. It's one thing to know about the mechanics of figuring out what companies are profitable and valuable and stuff like that. It's another thing to have psychology and emotions kind of get in the way of screwing around with our investment decisions, which it does quite a bit. So one of the biases out there that all of us run into or are constantly in conflict with is groupthink, this herd mentality. And the reality is, as investors, and as human beings, really, forget about us investors, we want to attach ourselves, we want to be associated with, because we're social beasts, we want to associate ourselves with people, with organizations, with institutions that are winning institutions, that are winning people. We want to be around winners, because who doesn't want to be around a winner? We want to be around a winning team. We shoot for the winning team. And one of the things it does is it feeds this kind of herd bias, this kind of groupthink mentality, where you get kind of tunnel vision and kind of get locked into a certain viewpoint or a certain perspective, and a lot of times you lose the perspective out there. And chances are when you get into a groupthink mentality, it very much becomes an emotional kind of thing. And when you break it down from an investing perspective, a lot of times when people want to follow the trends and follow the latest, what the latest in thing is, the latest hot stock, latest flavor of the month kind of investing concept, it's often when they get into it, it's usually at the high point, and it's usually jumped the shark by that point. And I see this often and often, lots and lots of times, and it happens a lot with retail investors because retail investors are just notorious for being kind of late to the party. When all the good stuff has happened, that's when they come in, and that's usually the time when things get kind of ugly. So it's the classic, this kind of groupthink. When you follow this groupthink, group herd mentality, you're often following a behavior that involves, from a stock perspective, buying high and selling low. And the only reason I bring this up, really, and what's really dawned on me is obviously what's going on with the market, but it's actually interesting because earlier this week I got an email from a colleague that I work with, that I've worked with in the past in coaching them, and he asked me about weed. He asked me what I thought about marijuana stocks. Now, for those of you who don't know, up here in Canada, the government has just announced that they're going to be instilling policies that will essentially legalize the use of marijuana under certain conditions, under certain protocols, under certain regulations, just regulating the whole process of getting marijuana. And so there's been a real surge all of a sudden in the last while in terms of marijuana kind of growing kind of companies and all that businesses associated with the whole marijuana grow up kind of thing. So it was interesting because my friend, colleague, he asked me, he said, what do you think about marijuana stocks? Should I be getting into marijuana stocks? And it was just, to me, it was the classic, almost FOMO kind of behavior. Stuff is going on and you just don't want to miss the boat, right? And so that's what's going on with respect to these marijuana stocks. And then again, it's just this group think, this group mentality, following the herd. Hey, everybody's going to buy marijuana stocks, so hey, I guess I should go and buy marijuana stocks. And it's just, again, this is the classic behavior that eventually leads down to a really dark and probably unprofitable place. And so when I thought about this, I thought, this is, he asked me what I thought, and usually the answer I usually give as a coach is as a coach, I don't recommend stocks. I don't say, go buy these marijuana grow-up stocks or go buy these solar power stocks or whatever. I say, let's think it through, like do the analysis. You have a framework of evaluating companies. You follow your framework, follow your investment ideology, follow your methodology. And then at the end of that, if you think marijuana stocks are wealth creating and create a lot of wealth and profit, and they are going to be durable profit in over the future, then hey, go for it. But again, don't do your homework. Don't make an emotional decision. Don't make a FOMO decision. So that's kind of where all this stuff I'm getting about is FOMO, because I found to me that call that I had was very much a textbook kind of call on this whole kind of behavior that we have. It was really textbook behavior that it was displaying. I thought it was really cool and interesting. So that's what it is. So being aware of your FOMO. So the thing is, how do we get over this? Like, how do we control this feeling that we have that we need to do something? We need to act on something before the boat sails off or the train leaves the station. How do we get over our FOMO tendencies? Well, the best way to do it, the best way to get rid of your tendencies, these FOMO tendencies, or to at least control them or manage them effectively, because you can't really eliminate a lot of these biases and behaviors we have, but we can manage them a heck of a lot better. And one way to do that is really about instilling discipline. It's about developing that, having a plan, having an ideology, having a framework of how you're going to go about making investment decisions, and then sticking to it. You need to come up with sort of like what your criteria is. What is your criteria for evaluating, measuring, and determining what kind of stocks you want to buy, and also when you want to sell them. What is your criteria for determining the risk profile of the company? Is this a risky adventure? Am I going to lose all my money if I do this, or am I going to make a ton of money out of doing this? You have to bring this kind of framework into your investment decisions, because if you do that and stay disciplined to it, then these tendencies you're going to have to want to chase the winners and chase the high flyers are going to be few and far between. You're going to be focused, you're going to have a plan, you're going to execute your plan, and you're going to get to the results that you want to get to. So that's one thing I always tell people when I want to coach people and I teach people is about just developing that ideology, developing a framework of how you're going to make investment decisions. And I do that. And I do that in my programs, in my everyday investing program. I teach people how to develop this framework for making better investment decisions. So the cool thing of having that framework is it just takes the emotion side of it. It takes that, oh my God, I got to catch up with this. I got to get on this before it gets too hot or before I miss the boat. Beauty of having an ideology, having an investment plan. So one of the things I ask is get a plan, develop a plan. If you can't do it yourself, a lot of times if you're just starting out investing, you can't do it yourself. Work with an advisor, work with a fee-only advisor, not somebody working on commission. Work with an investment coach, work with a financial coach who will, again, give you that framework, give you that structure, that foundation for building your investment framework so you can just avoid all these FOMOs. Now that's kind of the mechanical side of kind of confronting FOMO, but then there's the emotional side of confronting FOMO. Where else are you going to see FOMO is you're going to see it from your peer group, you're going to see it from your family, you're going to see it from your friends, your coworkers. You go out for parties, you go to the family dinner, you're going to the conversation then gets into stocks and investing and say, hey, look, I made a killing on marijuana stocks. Oh, I made a killing on Amazon the other day. And when you start people talking up kind of like their successes and the fact that they've made money on certain investment decisions, which is great, which is fine. But again, when you see other people doing that, again, FOMO comes in. It's like, holy crap, what am I not doing? I'm not doing this. I'm not getting engaged in the process. And so I got to go home and run and call my broker or just go start buying, whatever companies and start getting tips from friends, tips from these people who are making money off and all that kind of stuff. And it just leads you down a really tough path. So you get into those social kind of situations of seeing other people being successful and having that temptation to jump in when maybe that's not the greatest time to be doing it. So a lot of times what I just tell people, it's very simple. If you're at a party and a whole bunch of people are talking about stocks and how they're making money about it and the market's going up and it's going up, that's the time where you just basically either A, change the topic, or B, just walk away. Just go find somebody else to talk with. Just extricate yourself from the situation, from the conversation. And it sounds kind of, cheesy, and it sounds easier said than done. Sometimes it's that peer pressure, right? That peer pressure, that ability we want to be associated with winners. And so these people are all making money off stocks, and you're going, oh, why do I want to go away from that? Because chances are they've made it, they bought low and they've sold high, and so they've made the easy money. And the tendency, if you stick around and have that conversation, chances are you're going to get FOMO'd into buying those same stocks at a much higher price, and chances are they're not going to pan out the way that they panned out for your friends. So remove yourself from that situation, or remove yourself from that conversation if it comes, or just nod very nicely. Yeah, oh, that's really great, and just kind of dial it out in that sense. It sounds kind of cheesy, but it really does work in that sense. Again, it's about managing behaviors and controlling your emotions and controlling your behaviors. So all these things really feed, when you look at the competencies, and one of the things I do as an investment coach is I elevate and I develop what I feel are the 3 core competencies of successful investors. First one being that they're educated. They have an understanding of the mechanical side of investing as well as the behavioral side. They're very much in tune with their FOMO and know how to avoid FOMO and minimize those FOMO kind of behaviors. They're engaged in the process, and of course they're empowered, they're confident, they can make decisions, they feel like they make decisions that they're not going to lose sleep over. They're confident when they're empowered when they're making those decisions. So it's a really important thing I thought I would share with you. It really came from just a simple little phone call I had this week with a colleague that kind of brought up a lot of these ideas and behaviors and emotions that I wanted to share with you. Because it can really do some serious damage to your portfolio, and it can really screw up your mind and how you're going to make investment decisions down the road. So please don't get FOMO'd. Just ignore it, walk away from the conversation, and focus on your investment plan, focus on your investment ideology, stick to it no matter what the heck is going on around you. And chances are you're going to do a better job of growing your savings than getting FOMO'd. So that's all I got for you this week. If you have any questions about this, feel free to give me a shout. You can contact me through Twitter. I'm on there all the time. Again, I tweet all my personal investment decisions, my logic, my rationale, what I'm thinking about certain investment ideas. Also my observations. I tweet a lot of content out between my podcasts and my videos and my blog, so check it out. My handle is @SageInvestors. And you can also hit me through email. If you want to hit me through email, go to my website, www.sageinvestors.ca, and just drop me an email through there, and I'll be more than happy to answer any questions that you have about FOMO or any of our my coaching services and my courses that I teach on investing. So we'll do that. One quick announcement. As I said, as I teach a lot about investing, I'm actually I've mentioned this before. I'll mention this again. On May 25th, I'm going to be doing another in a series of my, I guess what I call them now, my demystifying investing series, where I demystify another investing concept that kind of people kind of know about, but just go, what does this really all mean? And so I'm going to be talking a little bit about ETFs. Exchange traded funds. We're hearing so much about them. They've become sort of the it investment right now. And there's a lot of good things and great things about ETFs, and there's lots of kind of not so great things. So I'm going to try and demystify, kind of take off the veil and share with you some basic concepts about ETFs and also how you go about evaluating them. And we'll actually practice. I'll give you an example. I'm going to do an example, live example of an investment decision I just recently made to purchase a specific type of ETF. So I'm going to walk you through how I thought through it. And once you see it, you're going to go, hey, this isn't that bad to figure out. So I invite you on May 25th. It's at 12 noon Eastern time. It's just for an hour. It's kind of a lunchtime thing. You can go to my website, sageinvestors.ca. There's a registration button there. You just need your name, email, boom. Space is limited. I only got spots for 50 people for this webinar, so jump on as soon as you can. And I'd love to have you aboard, and I'd love to share what I can teach you about a little bit about exchange traded funds to help you kind of mine through that whole thing, that whole concept there. So that's pretty much all I got for you this week, and it's been great. If you've been, thank you very much for listening in. If you're downloading this stuff through the iTunes thing, feel free to leave a review, leave a comment, stars, cheers, jeers. It's all good. And we'll see you again. So we'll see you again next week for another episode of Stock Talk. My name again, Aman, and I'm an investment coach here at Sage Investors. Have a great week, everybody. We'll take care, and we'll see you again. Cheers.